biggest difference between like incredibly great marketplaces and good marketplaces or okay marketplaces is if you're actually creating an entirely new experience that couldn't have existed before. Either you're unlocking new supply that never could have existed before that marketplace, or you're somehow like enabling a connection that never could have happened on the demand side.
Welcome to Two-Sided, the Marketplace podcast, brought to you by ShareTribe.
Hello and welcome. I am Sjoerd, CMO at ShareTribe, and I am your host. Welcome to episode number 3 of season 3 of Two-Sided. Again, as a reminder, so as opposed to previous seasons, this season we're talking to investors, not founders. However, like many VCs, my guest in this episode has been a founder and marketplace operator for many, many years himself as well. I'm talking today to Andrew Blachman, co-founder of Marketplace Capital. Andrew has a wealth of experience in building and operating marketplaces, and since a short while has also been investing in online marketplaces. I feel that throughout the conversation there are some really valuable insights for aspiring marketplace founders, such as, for example, the importance of creating new market opportunities. So Andrew explains how really truly successful marketplaces, they unlock completely new supply or demand that did not exist before. The way Airbnb did this for short-term rentals, for example. Another thing we touch on is why building traction before raising capital is key. Andrew shares some advice on how to validate your marketplace idea and gain traction without relying on funding too early. And maybe finally, of course, unavoidably, at this moment in time, we talk about AI, the impact of AI on the future of marketplaces. So Andrew shares how he feels AI can enhance marketplace experiences, making connection more efficient, and just overall improving the customer satisfaction. As always, I had a great time while also learning a ton, just talking and listening to Andrew. I hope you will as well. So here is my chat with Andrew Blachman. Hi, Andrew. Welcome to the podcast.
Hi, thanks for having me.
Yeah, no, it's really nice that you take the time to be here. I know it's early on your end, so let's get straight into it. But before we go down the marketplace rabbit hole, could you briefly tell us a little bit about yourself? What did you do before you became an investor in marketplaces?
Sure. So I've been a marketplace operator most of my career, actually. It's only very recently that I moved to the investing side in the last kind of year or two. I've always been an angel investor, but as a professional investor only the last couple of years. But as an operator for most of my career, over 20 plus years, I built a few different marketplaces. Most notably, I built a company in the UK and Europe called Get Me In, which was, if you guys are familiar with StubHub in the US, we were the equivalent company in the UK. We built that business, two-sided marketplace, grew it, and then sold it to Ticketmaster, the biggest player in that space. And then I ended up, after that sale, running Ticketmaster's resale marketplace internationally. So that's where my first sort of big marketplace success and experience came from. And after that sale, I also saw the power of marketplaces and how great they are when they work. And so, with the proceeds from some of that sale, I started angel investing in other marketplaces. So as an angel, I invested in about 20 marketplaces over about a 10-year period. Then I moved back to the US and launched another marketplace with a couple of colleagues that I had met that had founded a business called Top Adder, which is a live auction marketplace. And we actually grew that to be pretty big. We got to over 400 million of GMV at our peak, and we were profitable and thought we had made it. But that marketplace, unfortunately, we didn't have the network effects that you like to see in marketplaces, at least not the really strong ones. And so ultimately it became a performance marketing driven business, and we hit some headwinds. So I've experienced both sides of it, both good and bad of marketplace dynamics, that I've involved in a lot of operating roles. And a couple of years ago, I moved to spend more time on my angel portfolio. Then I became a scout at Craft Ventures, who do a bunch of marketplace investing, and decided I really enjoyed the sort of advising and investing side of things, and met my partner, Mike, at the same time. And we shared a similar thesis around marketplaces. and decided to launch this fund. I'm relatively new to the professional investing
Okay.
side and much longer on the building and operating
Yeah.
side.
Yeah, it's fine because I was going to ask you, like, in your introduction, that I think that my experience with marketplace founders is that they never found just one marketplace. Like, I've had the feeling that many people, or at least many people, once you see the marketplace model, you suddenly see it everywhere, or you see at least opportunity for it everywhere. So that's really funny because I feel that's exactly what happened to you.
Yeah, I mean, it takes a few times to get anything right.
Anyway, yeah, that's
So
true. Yeah, that's actually because I had that written down as a question also. That's kind of an interesting story, like, from how Marketplace Capital came to be, I feel like. Could you tell us a little bit about
yep.
that?
Sure. So I was, as I mentioned, a scout at Craft Ventures looking at marketplace deals. I have myself had, built a few marketplaces and seen the power. And if you look historically at just simple metrics like venture returns and some of the largest and most successful IPOs in history, a lot of them, a very large disproportionate number of them are
Uh,
marketplaces. And so we had this thesis that marketplaces, when they work, they really, really work and they create this great outcome. But they're also no doubt harder than other businesses, more traditional sort of B2B SaaS or even direct to consumer business because you got to get both sides right at
yeah, I
once.
was gonna, if you don't
I'm
mind,
sorry, go
yeah, if
ahead.
you don't mind interrupting, but why do you think it is? I mean, I can have some theories, but what exactly makes it harder? Because I think a lot of people underestimate that
Oh,
part of the equation.
I mean, there's a really practical reason that they're harder is because you have more than one customer
Mm,
at any given time, right? And
yeah,
sometimes you have two or three and competing those interests and making everyone happy becomes not just linearly harder, but exponentially harder the more
yeah,
sort of players you put into the mix. That's like one sort of practical reason. But the other more sort of esoteric reason or the reason I think about is that when marketplaces work, they're really like catching lightning in a bottle
mm,
and you end up seeing a natural lift to the business where, more supply begets more demand, begets more supply, begets more demand.
yeah,
And those are it's just very, very rare to have that happen in any business, just to have that natural lift.
yeah,
And that's what makes a good marketplace. That's what turns a good marketplace into a great
yeah.
marketplace. And so from a venture perspective, if you don't have that, you end up having an outcome that doesn't really always support a venture investment.
Yeah, sorry, I interrupted your story about actually how you came with Mike. So you were
Yeah.
saying that, like, you both saw that
Yeah.
marketplaces create these incredible outcomes if they work, and then
Yeah,
yeah.
no, I saw that as an investor and an operator, and then we both kind of decided independently, actually, that we wanted to raise a fund. So Mike, I don't know if your listeners are familiar, but Mike, my partner, Mike, created a community called everythingmarketplaces.com. So he's a community builder at heart. He was also an operator before that, but he created this community. Now it has a couple thousand active members that are all marketplace founders of various stages from, just getting started or have an idea to large and thriving marketplaces. And so within this community, he always thought about adding a fund or an investment vehicle to it. I had been inside Craft and on my own thinking about how should I raise a fund to pursue this strategy. We looked around and there are a few different funds that kind of focus on marketplaces that like marketplaces, but there was no fund that was dedicated to marketplaces. And so we thought there was a big opening in the market, and we thought that the combination of that focus and the community support could make us really outperform. So that the community can help us spot breakout marketplaces early and can also help us support the companies that we invest in. And so he and I decided to team up and launch this. And we launched it last year, the beginning of last year with our first fund.
Yeah,
So
yeah.
that's kind of how it came to be.
Yeah, I know Mike, of course, because the company that sort of provides this podcast, Share Tribe, he built his first marketplace. Or I don't know if it was his first, but I think he built his most successful marketplace on Share Tribe Studio Time. So I know him well, and of course I'm also a member of the Everything Marketplace community. So you mentioned earlier that you share a little bit of a similar thesis, or you've sort of developed a thesis. Like, could you maybe explain a little bit more about that? Sort of maybe by the hand of, like, what are you looking for a marketplace, or what are the type of marketplaces that usually draw your attention or your checkbook?
Yeah, it's actually super interesting. We've looked at our portfolio recently. So just to give you some perspective on what we do, we invest relatively small amounts in a lot of businesses.
Hmm.
So some venture funds are very concentrated. We are not concentrated. We've made 21 investments so
Okay.
far in the first kind of year and a half.
Yeah.
We expect to make about 40 investments out of this fund.
Okay.
And so we have a lot of data to look at, like, and we see thousands of companies,
Yeah.
as you can imagine. So we do have a very high bar, but we also have a lot of data in terms of the kind of marketplaces that we ended up liking and backing. And it's pretty interesting in that it's not focused on any one sector or even um, business model. We've got business to business marketplaces, we've got business to consumer marketplaces,
Hmm.
we've got companies that are sort of in the marketplace stack, we like to call it, so they sell to other marketplaces.
Yeah.
And so it's been pretty varied. So our thesis is actually much, much simpler, which is that just what I said earlier, that marketplaces, we think, create the winning business model in almost every sector. I mean, it's the kind of the original promise of the internet. You're going to connect people that couldn't have otherwise connected before we brought the world online. And so that's what marketplaces are. You're going to connect more than one side in a transaction or some kind of activity. And that exists in business to business, that exists in business to consumer, that exists in healthcare, that exists in labor, that exists in pretty much every sector. And so that's kind of how our investments have unfolded, actually. We just believe the model is the one that is right. And, not obviously not everyone is going to win,
Hmm.
but we think the model is the one that's going to right. So we look at for that model in different businesses, and we've backed at this point 3 different healthcare related businesses,
Okay.
a couple of different like labor marketplaces, 5 or 6 that are direct to consumer, or not direct to consumer, but business to consumer kind of related.
Uh-huh.
We've done a couple in childcare and sort of education.
Okay.
We've done a couple of business to business, like pretty much all across the
Yeah, yeah,
board. So
yeah.
it's been pretty interesting and part of our thesis too, because one of the things that we wanted to do is not just, focus on one thing, because you never know as an investor what's going to come
No.
across your desk. So even just the marketplace focus was enough of a filter.
Yeah.
Inside that focus, we invest in everything. And in fact, even geographically, we just made our first investment in Europe this month.
Okay.
And
Can you
so
share?
we expect to do more globally. Actually, that company is more in the marketplace stack,
Okay.
I would
Okay.
say.
Yeah,
So
yeah.
we've done 2 companies that are in the marketplace stack, meaning that their customers and partners are all
Got
marketplaces,
it.
and we have an obvious kind of vantage
Yeah.
point on that. And we
Yeah.
talk to a lot of marketplaces, so we can vet that, but also
Yeah.
that's a scenario where we can help those companies more than anything.
Yeah. Yeah.
And that's a
True. Yeah.
company based in France. They're called Raleigh, and they're basically an alternative um, data source for credit and other information. So, for example, they work with gig marketplaces like Uber
Okay.
and DoorDash and others, and they have more data about those Uber drivers than anyone else. And then that they can also leverage data from other alternative sources like government portals and other pieces to help underwrite financial products for those customers. So,
That's a really interesting model. Yeah. Yeah.
and they're growing really quickly, and we've known them for a bit, and it was a super, yeah, exciting investment for us. That one was just closed, so
Yeah.
it's our
Congratulations.
first
Yeah.
non-US
Ah,
deal, but
that's
we
that's
expect to
good news.
do more.
Yeah, our company is Europe folk. Well, not actually. The majority of shared customers, the vast majority is US, but there's I can see, for example, the marketplace conference where we met. Also, I think there's lots of interesting opportunities in Europe as well. So really nice to hear. So basically, you said just to recap, like you just sort of believe in the model, and then it can be applied to any industry or particular field. Yeah,
We do have, like, various patterns and things that we've seen, so we do
yeah, yeah. That was gonna be my question.
we have different
Exactly. Yeah, yeah.
theses, but they're different in different sectors. So, for example, one pattern that we've seen, and it probably doesn't come as a surprise to a lot of folks, but there's just been a big change in the way people work over the last, 5 years since the pandemic, but even before that, there's been this big change in the way people work. More people working independently and wanting sort of control of their own lifestyles and who they work for. They don't want to work for, one company or even a couple companies. They want total flexibility. So that's given rise to a bunch of different marketplaces that we've seen and invested in. We are an investor in a company called Berry Street that's a marketplace for dietitians, and they're growing incredibly quickly, and because they're creating this ability for dietitians to launch a business and actually run their own business on the platform. We're an investor in a company called Teach Me, which is a marketplace for sort of amateur lessons in various categories of sports, pickleball and golf and tennis. And so they're creating a new sort of revenue stream for these coaches, or I guess you call them instructors, but they weren't previously instructors. They're basically creating this new supply. And we're seeing that in a bunch of different sectors. So that general concept of like labor changing has been a big theme that we've seen kind of repeatedly.
Yeah. Yeah, that makes sense. That
Yeah,
makes sense. I think indeed, like this whole indeed like change of labor and people no longer following like a linear career and like that creates massive opportunities. I can totally see that. When you say like of course
it
like
does.
you look to healthcare and things you mentioned now, like is there still some sort of like, let's call them like green lights that you look for in a marketplace that like, oh, this is like, for example, I really like that you said about the instructor marketplace that basically that is, it's kind of like a market creator kind of thing, right? Like that market doesn't really
Yeah.
exist. Is that, for example, one that you're like, oh, that is, like the most famous
I think
example is like Airbnb, where basically, like the supply side didn't exist before. Like people didn't rent out their room or
yeah.
something. So is that one?
Exactly right. I mean, it's funny that you mentioned that one because that is probably like the most important that
Okay.
I look for personally. We have sort of like a checklist. Like there's I wouldn't say we go through the checklist with each investment, but there are checklists out there. And
Hmm.
for those of you listening, to the podcast, you can see some of the content that's been put together there around you want to see, fragmentation on both sides of the marketplace. You
Yeah.
want to see liquidity. There's all these things you want to see. But for us, I think you hit the nail on the head. Like the biggest difference between like incredibly great marketplaces and good marketplaces or okay marketplaces is if you're actually creating an entirely new experience that couldn't have existed before. Either you're unlocking new supply that never could have existed before that
Hmm.
marketplace, or you're somehow like enabling a connection that never could have happened on the demand side. So, one example, you mentioned Airbnb. I'm actually working with and advising a company. This is actually not in our portfolio because they're a little bit ahead.
Yeah.
They're further along than our portfolio.
Yeah.
They're a Series C
Okay.
sort of
Yeah.
stage company, but I'm working with a company that I'm incredibly excited about, called Pad Split, and they're a marketplace where they do exactly kind of what the name says, Pad Split.
Hmm.
You can imagine what they do.
Hmm.
They're basically a co-living
Yeah.
marketplace. So they take single family homes and they allow that owner of that single family home to rent out that home by the room
Hmm.
instead of the home at
Hmm.
once. And so they have a whole platform where they help that owner, reconfigure their house to be, suitable for pad split. And they have, shared kitchens and bathrooms, and some of them are private. They have the whole thing set up so that they can turn a single family home into 6 or 7 or 8 units. So before they existed, that inventory wasn't there. It was only single family home where you could get together with people that you didn't really know and pool in and
Yeah.
and find a way to access it. But because they've unlocked it, they've become the cheapest and most affordable housing option in every market that they're in. And so, they're still relatively early, but they already have, over 10,000 units that are live in the US. And to me, I'm excited about it too, because it has the potential to, it's not the silver bullet solution, but it's part of the solution to a lot of the housing
No,
affordability
totally. Yeah.
problems we
Yeah.
have. And, it's a very interesting marketplace that if it works and it's starting to work, has that elements of a flywheel where because as they get more supply in a given market, it's a better proposition for that potential renter
Yeah.
because they can actually move from house to house if they need to, and they have more selection. And then as there's more selection, more investors want to come in and actually invest in and build these units out. And so
Yeah.
it's super interesting. But it's not in our
No, no,
portfolio.
no.
It's just
Yeah.
one
Yeah.
that I
But
happen to have met and I'm working with.
yeah, no, this is a really interesting one. I was actually thinking that, like, this is one of these things also that I'm sure you come across this as well. That you're like, ah, how didn't I think of this before? Because basically what you're describing, like, I'm from Amsterdam originally, and that is how most people get their first, like, because in Amsterdam the housing problem has been alarming and permanent somehow, and that is how people get their first, student room out of the house. It's always some sort of, or not always, but it's often like some split, like some person who owns a house and then splits it up, but. It's never been possible to. I know there have been early marketplace models around it, but it's never really, yeah, it never really took off as far as I remember. Ah, that's really cool. That's really cool. You mentioned earlier, like, looking for the difference between like a good and a great marketplace. Like, how do you? And actually, maybe good to mention that you, if I'm not mistaken, please correct me if I'm wrong, but your marketplace capital is really about early stage marketplaces, right? Like seed.
Yeah, we invest at the seed, sometimes the
Yeah.
pre-seed stage. But the thing that's nice about investing today versus like investing, 10 years ago or even 5 years ago is even at the seed stage, expectations are a lot higher. So even the seed stage companies that we look at typically have real GMV, real revenue, real customers, even cohorts that you can look at and
Okay.
understand their behavior just because of tools like things like you've
Yeah.
built
Yeah.
to make it
Yeah.
easier than ever
Yeah.
to launch and to get traction without a lot of capital. And so even at the stage that we invest in, we tend to see signals that something is working. We've done a couple of investments purely like we love the idea, we love the founder,
Hmm.
and we think there's a chance here, but it's not even live yet, or there's something like it's just super early.
Yeah.
We've done that a couple of times, but we try not to because it's just so hard to predict.
Yeah. Because
And
exactly.
so
Because
we
yeah.
we prefer to see some real
Yeah.
traction.
Yeah, because that was going to be my question indeed. Like, how do you see that this flywheel is taking off if it's so early in the journey? But of course, like you said, like there's
When we have a larger fund and a larger, pool of capital, we probably will go later stage as
mm,
well, because I think that this stuff does play out over time, and
Yeah.
it is sometimes hard to see early on. And again, we believe that the winners in marketplace, the other reason why marketplaces create these enormous outcomes is because the winners tend to take
Yeah.
most. Doesn't necessarily mean that there's one winner in a marketplace. We don't believe that you can't be like the number 2 or number
Mm.
3, but it's way better to be the number 1.
Yeah, yeah,
And
yeah,
so,
yeah, yeah.
and we've seen that over and over again. Sometimes even at the seed or series A, it's just hard to predict who's going to
Mm.
win. And we have a bit of an advantage with the community, so we can spot things. I think ultimately we expect to go later as well.
Yeah. No, it makes sense. So you mentioned you were thinking about jumping into later stage. I assume that's not going to happen with the same fund.
That's right. This first fund we've been public about this. And actually, if you go to our website, obsessedwithmarketplaces.com, which is, I love that.
Same. Yeah,
That's
yeah,
our
it's
website URL.
fantastic. Yeah.
It's also marketplace.capital. You also will find the same site, but we have a founder's manual that sort of describes what we do and how we do it. But we invest exclusively in sort of early stage marketplaces today because it's a $10 million fund.
Yeah.
We write checks average between $100,000 and $250,000. So relatively small checks. We don't lead rounds. We invest alongside other institutional leads.
Mhm.
But we're about halfway through this fund, and we're planning sometime in 2025 to start fundraising for Fund 2, which would be sometime in
Mm.
2026. And for us, Fund 2 is just based on the success that we're seeing with Fund
Yeah.
1 and the ability to do this at a little bit of a bigger
Yeah.
scale. We still think that we want to not be a lead investor typically
No.
because, again, we're spread pretty thin across our
Mhm.
portfolio. So we will continue to do seed and pre-seed, but we might also do, A's and B's with that fund since we'll have more capital, more
Yeah.
firepower at our disposal. And so the first fund is looking really good. I mean, it's early. These funds are 10-year funds. And so we're in year 2. We've had, 4 or 5 of our portfolio marked up in really great rounds. And so we're excited about that, but it's very, very early
Yeah, yeah, yeah.
to
But
see.
anyway, that's a better way to get into the next fundraising with a couple marked up at least. Yeah, no, congratulations. When you think about like the market and or when you think about like marketplaces that are sort of innovative, do you see any sort of interesting monetization models, or do you see like still sort of commission takes most, or like most still work on commission, or do you see, because you mentioned earlier, for example, I forgot the name of the company you invested in, but it has this, Raleigh, which is like I've seen a lot recently also like with different financing players coming in and like making new. So what is your view on that?
We've seen a lot of different monetization models, and they can really run the gamut. I mean, we do like to, if it's a pure marketplace, we like to invest. I mean, this is probably the clearest thing. We want to make sure that marketplace is involved in the flow of funds and they're not just like a lead generation type business, just because it's much harder to build lasting value in the lead generation businesses.
Yeah.
So we do want to see that you're in that flow of funds and the customers interacting directly with you and you're paying out, suppliers. We think that makes, a ton of sense. But we've also seen a lot of these marketplaces that have been able to sell a product that's really valuable on one side of the marketplaces as a, sort of a wedge or a stickiness or a way to build out supply, for example. So those are like what we'd call sort of SaaS enabled marketplaces where they have some sort of software product that one side of the marketplace is paying them for. Sometimes they're giving it away for free as a way to, enable transactions,
Yeah.
but typically, one side is paying for it. We've seen that. I think that makes a lot of sense. And we have seen, you mentioned financial products or other services that are layered on top of the marketplace. I think that also makes sense, but tends to be most effective when you're at sort of
Yeah.
scale and you have, an audience that it's meaningful for, because those things rely on usually like you're in a better position to have data and you can support it. But this idea of like SaaS enabled marketplace is one that we really do believe makes a lot of sense. And we have invested a few times in that, where basically the SaaS was like what the business started as, but because they're have this great compelling SaaS product, there's an opportunity to launch a marketplace on top of it. It's not always like fully thought through that we're going to be a marketplace,
No.
but sometimes it's, well, we have this side. How do we what's the next step to make ourselves, really indispensable? And if you build a marketplace on top of that, then it's phenomenal.
Yeah, yeah, like I was gonna say like classic, like comforted tools, stay with the network type of approach, but indeed, like it's
Exactly.
surprisingly often an afterthought. When you imagine, for example, maybe in the light of the pitch for the next fund, like what do you see? What gets
Yeah.
you excited, like in the marketplace area still?
I guess there's two main things that get me excited. One is, and this is sort of a reaction to some of the feedback we get, which is like, oh, aren't all the good marketplace ideas taken?
Hmm.
Like,
Yeah,
isn't it too late to invest in
yeah,
marketplace? We hear that all the
Yeah,
time, and
same.
I think it's kind of funny because all you have to do is just, like, think about your own personal life every day, but also the businesses that you're involved in
Mhm.
every day and how much inefficiency there is in the world of
Yeah.
commerce and just finding the right partner or customer or supplier or whatever it might be. And so we just think it's still early days
Mhm.
in terms of taking that inefficiency out, creating marketplaces that actually help you find that unique person on this planet of 8 billion people that can
Yeah.
solve your problem.
Yeah.
And the internet promises
Yeah.
that. And so we basically like that's the biggest reason we're excited is we think it's still very, very early days in
Yeah.
marketplaces. And we think they will take over every single industry and category at some point. So that's like the very broad,
Ah,
like
that's cool.
pie in the sky thing. But I think in terms of like actual practical things, a lot of people point to AI and the impact of artificial intelligence on all of these different, use cases
Mhm.
and business models. For us, I think it's going to be a phenomenal thing for marketplaces because AI can transform the experience on
Yeah.
marketplaces and can make things possible that never could have been possible
Yeah.
before, whether it's, digesting a bunch of information, enabling lots of communication back and forth, but sort of all these like labor intensive processes
Yeah.
that you couldn't have imagined before, but AI cannot replace importantly, AI cannot replace the customer relationships. And that's what makes a marketplace really, really powerful and building that place for liquidity, that place that distributes to customers and distributes to suppliers. That's the real value of a marketplace is the network. And
Mhm.
so both from a positive and a defensible point, I'm super excited about AI because I see opportunities all the time where this marketplace that existed in, 5 years ago has a really bad experience, but now today with AI, it can have a
Yeah.
phenomenal experience. Yet if it works, it's not like another one can come along day two and just build a better
True.
mousetrap because
Yeah.
it's the network that makes it
Yeah.
valuable. So we've seen a few of those examples. I'm not sure who's going to win in some of these things. So
No.
it's like one of those scenarios you asked about earlier. Well, how do you know who to invest in? We
Yeah.
don't really always know. But one area, as an example of this, just to make it more concrete, is I've looked at a bunch of companies in the home services space. We've had in the past 10 years, explosion of marketplaces like, Yelp and
Mhm.
Thumbtack
Yeah.
and Angie's
Yeah.
List and Home Advice, all these marketplaces because home services is a huge
Yeah.
category. But if you look at every one of those marketplaces and they all do a good job, they connect
Yeah.
people and they're a good marketing platform, but they all have very poor customer experiences, or you can see it in the net promoter
Yeah.
scores. Like people don't like it on either side, on the supply side and on the demand side, because it's such a hard problem to
It is. It
solve.
is. Yeah.
It's like,
Yeah.
but if you think about, and we've seen this pitch. So I'm not advocating someone to go and build this because we've seen this
Mm.
pitch a bunch of
Yeah.
times where AI can solve a lot of this because AI can help you diagnose. Let's just use an
Yeah.
example of something in your house. AI can help you, diagnose what the problem is, find the best potential vendor,
Yeah.
communicate with that vendor back and forth, figure out what it's gonna take to fix the problem, and then just basically provide you with a
Yeah.
solution. And then on the vendor side, AI can make it so that you're not dealing with, like, 100 different window
Yeah.
shoppers
Yeah.
that wanna talk to you and waste your
Yeah.
time about potential jobs, but actually just hire someone.
Yeah.
We've seen that pitch, it makes sense, but the problem with this business or the hard part about this business is gonna be distribution to both sides, and so we think if someone cracks it and someone gets, like, that flywheel going
Mm.
and or wins this market, that's a potential to be an enormous marketplace.
Yeah.
And I don't know who's gonna do it yet. We've seen like 5 or 6 of these pitches,
Yeah.
and
Yeah.
so
Yeah. Yeah.
I'm waiting for someone to do really well at
Yeah.
this, and we'd love to back them when they do.
Yeah, that's a really interesting one actually, because I've just been recently thinking about this. I'm going a bit off track now, but what we've earlier said, I think I got this from Matthias Ockenfels from Speed Invest some years ago. He said like marketplaces, they bring transparency, efficiency, and trust like to a thing. And I've been thinking about for something, I don't remember where I got this idea, but they're all like there are three forms of basically information asymmetry. Like one side, like there's information asymmetry between the sides of the market. And I think that is something that like AI is so well set to do, right? To take that information from both sides and somehow equalize that asymmetry, like whether that is the amount of vendors that is available or whether the price is reasonable. And on the other side, like what you also said, because that's what I don't often think about the supply side, but that like for a plumber service, provide the actual information that is needed so that when that person comes on the job, knows that that's the job they signed up for and not a totally different job. Yeah.
It happens in so many different categories where you don't even think about it today because it's just the way it is. It's just the status quo,
Yeah.
but you spend as a consumer, certainly in business as well, but as a consumer, you spend so much time and effort doing
Yeah.
research that you don't have to do theoretically if you trusted a platform that was doing that
Yeah.
research for you. And there are cases where you want full transparency and you want to make like decisions, you want to read a ton of reviews and figure things out, but a lot of times you don't actually. You just want
Mm.
product that works. And so, Uber is a great example. You don't really want to like choose your driver. You just want to know that the driver is great and going to show up on
Yeah.
time and then going to take you where you need to
Yeah.
go. And so we think that that's true in a lot of different spaces as well. But even as you get to things that you want more sort of control over, more choice, and
Mm.
AI can do that for you. If you're like, "Hey, I really want to go on like a, vacation. This is like the kind of stuff I'm interested
Yeah.
in. This is my family." Like it's hard to do that with a marketplace, but it's much easier to do that with some kind of AI agent that's
Yeah.
actually acting on your behalf and helping you figure out and digest information that's out there so you don't have to do it all
Yeah.
yourself.
No,
And I've seen that happening in different sectors. I mean, this is all like easier said than
for sure.
done, but
Yeah.
I,
Yeah.
I, I believe it's going to happen. I believe the marketplace winners of tomorrow are not necessarily the ones of
Mm.
today. A lot of it comes down to the fact that, they've built their business model, how they've built it. So
Mm.
take the home services
Mm.
example. I think it's unlikely that the Yelps or Thumbtacks or Angie's List of the world
Mm.
are going to be like the winners in AI. I could be wrong about
Mm.
this. There's people that feel the opposite,
Yeah.
that AI is going to just like force all the gains to the current winners. I actually don't agree,
Yeah.
but we'll see. It certainly creates an opening to have a compelling product.
Yeah, I can see both ways. Like, what also referring to what you said earlier, that sort of the important part is still the network, and of course, the incumbents often have the network, right? Like they have that asset already. So I can see both ways. Yeah,
That's the counter
yeah,
argument to what I
yeah,
just
yeah.
said.
No, totally, totally. But you have to choose. Yeah, yeah,
Yeah, I've been in enough big companies. In fact, most relevantly, like, at Ticketmaster,
mm,
we had all the
yeah,
distribution for business model reasons. We couldn't compete with, the likes of StubHub. And
yeah,
now I'm also an investor in a company called SeatGeek.
yeah,
And
yeah. I know
we,
SeatGeek.
we
Yeah,
couldn't compete with those businesses, not because we didn't have the distribution and
yeah.
scale, but because
Too big.
we were beholden
Yeah,
to our
mm,
customers and to our business model. And
yeah.
so I think the same thing is true in a lot of other categories. And it takes, a very long time to shift those behaviors, and it creates big opportunities for upstarts to come in and do
I
well.
believe that. I believe that. Last question. Speaking about the marketplace of tomorrow, what advice would you have for a new marketplace founder? Very early stage, pre-product, product. Like, what is the number one thing that you think like, this is what they should be thinking about, or what they should be doing, or even should not be doing?
What I hear the most about, because I'm now an investor, I'm sitting in like the venture capitalist
Mm,
seat. And most people come to me trying to, obviously raise capital. I would say that speaking directly to like a founder before they've raised money,
mm,
trying to figure out what to do. I think like the venture capital route is absolutely not for every business. And so I would, if I, as a founder, try to sort of preserve as much optionality as
yeah,
possible and try to prove out whatever marketplace value proposition you're trying to build before you go and raise money. And so that might be faking the supply side of it, or doing something to validate just that there's the demand side of it without actually having to build the supply side, or vice versa. Because I've seen companies that their goal is basically to raise money. And if your goal is to raise money, you might be
mm,
successful.
yeah,
You'll raise
yeah,
money for something that you probably shouldn't or didn't need to raise money
yeah,
for. And so that's just like a very high level advice I get to not just to marketplace founders, but to any
yeah,
founder. In my own personal lived experience, like my biggest success came from a company that we never raised venture money
yeah,
for. And I've also been in companies where we've raised, not hundreds of millions, but like dozens. I
yeah,
guess in my last company, we raised 65 million and ultimately had no good outcome for anyone. And so I feel like that's one piece of advice. In terms of marketplace specific, I think, again, trying to boil down that problem to one that you can accomplish without capital is part of the
mm,
exercise. So, like, how do you get the supply
mm,
side without spending
yeah,
money? How do you focus on enough of a narrow wedge? Maybe it's like if you're building like a local marketplace, how do you like tackle one neighborhood or
yeah,
one postcode or one geography? Those are, some of the practical
yeah,
things we tell people.
yeah,
But generally it's try to build a great business without capital.
yeah,
That's the
yeah.
ultimate
I
success.
think that's fantastic advice. Thanks. I think that is often overlooked. I think a lot of the startup advice that we hear is always somehow drenched in venture capital because those are just the biggest outcomes often. But I agree that probably does not apply to most businesses, even like most marketplace businesses. Even there might be just a few. And
Yeah, it's also a reality that it's been easier
mm,
historically, over the period that we're in. That was a crazy period where it was easier to raise
yeah,
capital than it is
yeah,
today. So capital raising, I think, which is very good for everybody, for both
yeah,
investors and for the companies. It's very good that it's a much higher bar to
yeah,
raise capital
yeah,
today. It's a great thing because again, the worst scenario is for both an investor and for an entrepreneur is to raise money for a company that doesn't need or
can
can't
make it.
return that capital. And so that's one piece of advice. But the funniest thing is that's the hardest advice for people to hear. Again, it's really strange to me because it's not self-serving at all. I, as a venture capital, actually want people to want to raise money, but that tends to be what we say is that I don't know if you really need to raise capital for this. The flip side is that when something is working, again, as I mentioned, marketplaces, I think AI makes a lot of things cheaper and more efficient, and there's been a bunch of advances make it easier to build. Distribution is still the hardest part of any business. So if you can raise capital to pour fuel on a fire that's already starting to burn, that's fantastic, and that's where we want to spend our time.
And then they should go to obsessedwithmarketplaces.com.
Yeah, and the other beauty of our fund and business is that we support companies even if we don't invest, and that's every fund might say that, but for us, it's actually true because of the community. So you're in the community. We encourage everyone to join the community. There's a ton of activity there, and we're there to help in ways that we can. It's probably not going to be Mike or I directly, but we know someone in the community that can help with any problem that any marketplace is dealing with.
Yeah, absolutely. Check it out at everythingmarketplaces.com. And was it obsessedwithmarketplaces.com?
Obsessedwithmarketplaces.com.
Excellent.
Or simpler, marketplace.capital.
All right. Henry, thank you very much for your time. This was a pleasure from my side, and see you next time. Thank you for listening to Two-Sided, the Marketplace podcast. If you enjoyed this episode, don't forget to subscribe. And if you really liked it, please give us a rating or a review on Spotify, Apple Podcasts, or wherever fine podcasts are downloaded. If you got inspired to build your own marketplace, go visit www.sharetribe.com. It's the fastest way to build a successful online marketplace business.